Welcome to Taking Stock on Thursday, the 6th of July, 2023. And by the way, if you are watching this on YouTube right now, subscribe there. Hit the like, share, but subscribe because this show will be going live and you can only chat if you subscribe. I don't know if that's true, but it's a rule we have to put in. All right, John.
Not too bad. How you doing?
Yeah, well, I'm not too bad, but I'm going to share my screen straight away with you because the indices are looking dreadful. In fact, let's go live to London Stock Exchange. Let's share the screen there. Look at that. FTSE 100 down 1.24%, 250 1.3%. The aim again, like yesterday, is not as bad as the big indices, but we are seeing this rolling over of the indices there. Any idea what that's down to? I know we got bad PMI. In fact, we're going to come out from the China PMI sort of 2 days ago was bad, and that drives a lot of the world. But I know we got construction data out that's bad for us. But apart from that, it's getting a little bit bearish again, isn't it? We are at, I mean, if you look at the chart here in the FTSE, right, FTSE 100, I mean, it's sort of rolling over, but it's been one of the best performing indices. But the FTSE 250, look at this. Last week, the week before last, almost 10 days in a row down.
Yeah,
we're not quite back that low, but yeah.
Growth worries, inflation worries. Any other worries you want to add? I mean, the FTSE 100 has done well because it's basically, it's an old economy index. So when I mean, it's been criticised for years for not having enough tech and such the like. But in the last year or so, that's actually proved an advantage. As big tech sold off over in the US. But the FTSE 250, on the other hand, is always seen as very domestically focused, and we are teetering on recession. So that
yeah. Well, do you know what was annoying? Like I said, I did actually start investing on a monthly basis into a high dividend paying fund. It's basically the FTSE 350, the 50 biggest yielding companies in the FTSE 350. I thought I'll insulate myself, keep my portfolio a little less volatile because I hold a lot of sort of micro caps and all that stuff. And even that's taking a big knock now. It's like, no, my word. Is it anywhere to hide apart from cash at the moment?
Well, yeah, not really. I mean, rising bond rates. And it really makes it very difficult for other sort of income producing assets to match up. So if you say the average yield on FTSE 100 is what, 4%, 5%, if you can buy a bond at the same rate, you're going to buy the bond. So essentially you have to your income producing assets have to reprice. It's as simple as that.
Yeah, well, look at that. That is a 2-year government bond yield. Okay, and if you look back to 2022, we were literally down at 0.5%. And now it's 5.45. I mean, that's a new high today. Look at that. It's a new high up here. 5.4. And as I say now, I just saw yesterday I think mortgage rates. People aren't getting mortgages now. They can't get fixed year mortgage. I don't know, 2 year, 5 year. I don't know what they were, but above 6% they are.
Yeah.
So look at that. If that was a chart of a stock you were holding, that's like a 10 bagger from from nothing pretty much in February 2021. That's a phenomenal return.
It is. It is. I saw some figures the other day from various brokers, AJ Bell, I think Interactive, and they were talking about there being a massive spike in demand for government bonds, and relatively short duration ones as well, 2 and 5 year. As I say, that as the money moves, it makes it very difficult for the stock market to compete against that sort of yield.
Yeah. Well, let's look at some winners and losers today amongst the small micro cap space. Petromatad, I don't know if you're aware of those. I spoke to the CEO, I'm sure I did a while back, quite a few years back. But one of these companies always looking for sort of high impact wildcat drills, and they're pleased to announce that the cabinet of the Mongolian government has approved the certification of Block XX exploitation area, including the Heron oil discovery, a special purpose land. So I don't know what they're up by. Let's have a quick look at what they're up by. Are you aware of Matad? It's one for the risky gamblers, really. Petromatad. It's been around for a while, but I'll share the screen. But even with that rise today, which is I think it's up about 50% on that. It's still sort of lagging. Yeah. I mean, look at that, the performance of that chart. If we go back from 2017, look at that, look at the hype on that. It did get 37 pence at one point, but like I said, it's been a bit volatile, up and down on these sort of potential discoveries and then down. But wildcat, I've often said this, it's almost people think they're going to get rich off these big oil discoveries and stuff, but the chance of discovering something like a wildcat oil play is like 10 to 1, 5 to 1. It's like it's like backing a second favorite horse in a race, and that's the kind of odds you get. So
I mean, it has a discovery there, and there are plans to bring it into production quite soon. So it's not a company that I've looked at massively, but it's got cash in the bank. It's as I say, got something to go after. So you never know. But I agree. It's these are 10-to-1 shots.
Yeah, another winner today is up. Let me have a quick look. Is up around about let's have a look. What is it? Another sort of 84% up today. It's called. I've never heard of this company. In fact, let me share the screen with you. But they're called in brackets X Net Zero. Now they're sort of investment company, and in fact, you can look at all this on the website, Vox Markets. But they are. Energy transition, they focus on that, which obviously a big area. They announced its portfolio company, Waste Fuel, has secured $10 million from BP. Now, it doesn't come a lot bigger than BP, so it's that's a good thing. And they say because of this, I think their net asset value has gone up by like 181% today. But what do you think? I'm never really a fan of investment companies. I find them hard. If I can try and get access, because normally, this is the way I look at it. If you got, say, if they're investing in 10 companies, for example, and they got 3% of each company, then your portfolio exposure to that company, the portfolio company, is like 3%. You got 3% of 3%, and then you got 10 companies that may not be a success because they're also startups. So maybe quite a few failures amongst that, and they're only as good as their average. So if you get some fail, some succeed, and yet you got 3% of 3%. So it doesn't make a lot of sense to me. Portfolio companies. I mean, I have done it. I have done it now and again, but I try to avoid portfolio companies for that reason. Lack of exposure to the business you want exposure to, where you've got to hold a lot of others as well.
Yeah, I guess they give you a chance to tap into areas of the market where you wouldn't otherwise be able to get access. And private equity is a very good example of where investment companies are actually very useful. Anything liquid, investment companies are great. So property or say private equity. I quite like the look of this company. I mean, it's I'm a big fan of anything that with exposure to the energy transition, to the shift to net zero. Because regardless of what you think about it, money's flowing into it thick and fast. I had a look at this one this morning. I had a look at waste fuel specifically, and it's basically waste to fuel, biomethanol. And BP's coming in basically to as an offtake partner for this fuel, and to help it refine the commercial production process. So the first project is going to be coming up in Dubai. I've got some big agreements with global shipping companies, AP Moller Maersk, which is a big container shipping company. And shipping is, it's a dirty industry. Finding cleaner fuels to power that is quite important. It's an interesting portfolio. This particular investment, Waste Fuel, makes up the bulk of it, which is why this has had such a pronounced effect on the share price. But it's got some other interesting little bits, doing stuff in sustainable housing and ESG data. Even after this jump, those shares are trading at a massive discount to net assets. This is the other reason I like investment companies, is that if you are confident in the underlying assets, and you think that the market is judging them too harshly, you can buy them at a huge discount to NAV. These essentially sort of 20p in the pound for something that's particularly racy at the moment.
I do. I mean, I got quite a bit of exposure to sort of transition through companies that net zero, because like I say, you can't. I said follow the money. That's always a saying, isn't it? When you get so much money pouring into this area, and it's going to be here for a long time. People see these arbitrary dates like 2030 or 2050, but no. For example, if you look at good energy and they're in heat pumps, solar, and all that, people are going to be transitioning this for decades. It's not just the next 5 years, or whatever. It's going to keep happening for a long time, And so that money spending, and also you get improvements, upgrades in all the heat pumps and the solar, and all that. So it'll continue forever. So. Well,
I think a lot of businesses in the last year or so. I was speaking to a company yesterday called Triple Point Energy Transition, which is another investment company. Focused on renewables, and one of their big streams, the fastest growing stream of their business, is companies that are looking to become either self-generators or put in place technology, environmental technology that helps them save money. And what happened over the last year or so with the energy crisis, has seen a lot of businesses wake up to the benefits that they can achieve from implementing this technology. So, it's a financial imperative, and it's bottom up as well. Forget the big targets, bottom up is where it's happening.
Yeah. So one of the losers today is Emerson, and I've had these on the podcast quite a few years back when they first came on, actually, and in fact you see that there. But the news today was a Q2 update. I couldn't discover why was this falling, because they are down like 33% here.
Well, they didn't get their environmental approval.
Yeah, well, do you know what? I read through the RNS. I was going, okay, environmental approval for the project. So I just read through that. This here paragraph, environmental approval. That makes you seem like, to me, that they've got environmental approval. So I thought, okay, what is it? What is it then? Because I was skimming through. I said, what is it? Project financing? Is that what it was? And I thought that's what it was. So I went on Twitter and I looked at, and I put the ticker in EML, and then someone did say, why didn't you tell us? Why didn't you release an RNS that you hadn't got the environmental approval? Because it suggests they have got just that title there, environmental approval. So you assume by that headline they've got it.
Yeah,
it turns out they haven't regionally. It's been rejected, and so they said they've gone up the chain a bit. The national ministerial committee, which is chaired by the head of government, includes that. So this is key, isn't it? I mean, we talk about environment and all that stuff, and you've got to get environment. And that's the trouble with mining and all that stuff, isn't it? There's so many hurdles. Putting a mine together and stacking it up. And in fact, we probably should, it's worth looking. I don't know what the stats are going from explorer to producer, but it's very low, I know. But there's so many hurdles, from funding to permitting, everything, isn't there?
Well, that's why the Alba News, day before yesterday was so interesting, because they have gone through this permitting process, and and as George Frangiskides, the exec chairman, said, they had to move heaven and earth to make that happen. It is hard. To get those approvals, and here is a good example. And this is a really important commodity, potash, as well. This is very, very important for agriculture.
I would say to people, just be very clear in your RNSs, just saying environmental approval, a heading with that suggests you've got environmental approval. I don't know, but maybe I'm not very good reader of RNSs. That's why I like doing a podcast and chatting, because in my mind I like the normal conversation of talk rather than RNSs are worded in such a way. It's almost like reading legal documents. You have to read and reread. What does that mean? I don't understand what that means. Yeah. But you can see the share price there, a big dip there. I've not seen the share prices. One of the most read RNSs, by the way, you can see all these on the front page of Vox, but is Horizonte Minerals. Now, I've followed these for a while back. I did hold these. And I would also like to know, actually, something that's the biggest re-rating of the share price is when a exploration company starts putting out news and heading towards PFS, DFS, all that. But when it gets to production, it takes a while then for the share price, because they've got to start raising money and all that stuff and diluting the shareholders. But they have. I mean, this is a company that could be going towards production, but they say they are, and they say, what is it? So Horizontal, they are pleased to announce received its mining approval permit for their 100% owned Araguaia nickel project in Brazil. And they said, when is it? It's the Q1 2024. Araguaia is under construction with first metal scheduled for Q1 2024. So they're almost there. We're not far off Q1 2024. But they've got two projects as well in Brazil, Araguaia and Vimeo, nickel and cobalt project. So very important commodities there. Do you hold any mine stocks, John, or have you in the past? Are you into that or not?
No, I don't. I prefer revenue generating companies, if the truth be told. There's definitely, I definitely think that there is merit to a lot of these stories, but as you say, it's difficult. And I was speaking to a guy the other day, Randy Smallwood, who's the chairman of a company called Wheaton Precious Metals. There's an interview on Vox, actually. Also chairman of the World Gold Council, and he's basically saying it's really hard to get mines approved these days. And this is a common thing I hear. The environmental permitting is so hard that even the most modern mine, which will be less impactful than sort of dirty old mines, are not getting approved, or they're not getting the capital that they need to go into them. So that's the reason I tend to avoid it. If I was going to play the mining sector, I'd probably go through a mining investor, i.e. an investment company, because it's just the route I would feel more comfortable with.
Yeah. The problem with, but you know what? The honest day for me, and I'm biased, I do hold a bit of stock in this, but if you want to get wealthy in shares, now it's hard, again, really wealthy, but you do find you get the stratospheric rises in like mining stocks. You can do that. You know, if they have a big resource in a very hot commodity, it can literally re-rate. I had an amazing return on Asian Metals, Asian Metal Resource, ARS years back. But now what I prefer also is biotech or biopharma or even technology or biotech. You also get that aggressive re-rating in the share price. But I prefer the way it's done in biotech. For example, if you bring a mine online, you have to get debt funding, to get that mine online. And if you've got a lot of debt, then it slows it down, the payment process, and so all that stuff. And you got to raise a lot of money beforehand. With biotech farmers, what they do pretty much, small caps, they tend to prove up assets through, say, clinical phases, preclinical, then phase 1, phase 2, and then phase 3 gets really expensive. So they don't go for a partner there. They don't bring any debt on. So they do still need to raise some money for themselves, for equity and all that stuff. But they get to phase 3 then, and they tend to look for a partner. Or even before that, I think who is it? Poolbeg are preclinical, aren't they? And they try and get a partner before it goes into clinical trials, because they start getting expensive then as well. But Destiny Pharma, and I think this company's honestly so undervalued, and that's why. And it's one of those stocks where don't go mad on it, because they are still risky. They're going through clinical trials, but they have 2 assets now going into phase 3. Now, if you look around the AIM market, anywhere around the AIM market, any company whatsoever, try and find a company valued at sub 30 million. They've got a 10 million in cash. They've got 2 assets going to phase 3, and they're both sort of delivering unmet medical needs in big areas. And in fact, the first asset has been partnered up, but the second asset, XF73, which they've released an RNS on today, and it's by Scientific Advisory Board, and they're saying this could be a new standard of care for is it sort of
surgical infections, isn't it?
Yeah, staphylococcal hospital infections, including MRSA, including superbugs. This will be the new standard of care, and they're saying this now is a potential market potential of about $2 billion. So it's huge. The trouble is the share price on the announcement of the first asset deal, which was the share price doubled from 30 pence to 60 pence from December to January. Then they announced that they raised some money at a discount, so it almost pulled the rug under from the momentum, just fell out at the bottom of it completely. And then they're saying that now we're going to get a deal on the second asset before the end of 2023. And then the CEO stepped down again. Momentum took another hit. What is going on here? But the interim CEO is a lot more experienced than the previous CEO. She's held high roles in many of the big companies, Roche, GSK, at infectives in that sector. So she's really well placed, and they've just had this independent sort of board, advisory board, saying yes, XF73 is a unique potential. It's going to address a massive market. So we're starting to get some traction again, hopefully. But I think they've got plenty of cash H2 2024, and they said they'd get a deal before the end of 2023 on that second, and it'll be a lot bigger because they own it outright. M3, their first asset, they don't. They have to pay a royalty, but they own this outright, and the market size is twice the size. And I just say, if you go back, this was priced at £1.80 about a year and a half, 2 years ago, even before they had the first deal on the first asset. Now they're going for the first deal on the second asset, and they're both at phase 3. Amazing data from clinical trials going into phase 3, and yet it's a sub 30 million. In a bull market, you wouldn't get anywhere near that valuation. It's ridiculous.
No, so, I like this sector as well, actually, and I do own H5O in the sector.
Okay, yeah.
Which I see that as a picks and shovels play. It's actually supporting companies researching in various diseases, mostly infectious diseases, through their clinical trials. I mean, I think this is an industry transformed, and I think the pandemic had a lot to do with that. In the past, it was always a nightmare. It was a long shot to get anything through approvals, and then there was almost a trial and error approach to drug discovery. Yeah. I think the pandemic, sort of first discovered the human genome, and then the pandemic putting that to use, has really changed this industry. And now you've got AI as well, which is supporting drug discovery, and things like H5O's human challenge models. All of these things combined are making it much more possible and much more likely that a drug gets through the approval process. And also, I think the world has woken up to the need for treatments for many. I mean, it's amazing how many areas of unmet need there are. Absolutely extraordinary. So many conditions or so many viruses or whatever that just simply don't have a treatment, either vaccine or antiviral. It's extraordinary.
Yeah, exactly. So I mean, if you want to like have that sort of almost like fantasy story of doing it 5-10 bag, you have to look in those higher risk areas. But for I've gone off mining and I prefer biotech or tech. That's what I prefer, because of course there's also jurisdiction. Destiny Pharma are based in the UK in Brighton, and they're sort of pitching to people in America, which to me is a safer jurisdiction than say some parts of Africa where you're trying to get permits, or you have to buy a goat to give the village elder in order to get a permit.
Jurisdiction risk is definitely something that anyone investing in mining needs to consider, and it's definitely something that Randy Smallwood at Wheat and Precious Metals, spoke quite enthusiastically about, that they really only want mines in what they consider to be stable jurisdictions, and most of those are North and South America. Yeah,
exactly. Or Canada, Australia, and there's only certain places. It's amazing how much minerals there are in Africa, and you think, why can't there be any in this country? But anyway,
well, it's funny. There is we actually wrote a report on Vox on mining in the UK. There are quite a few miners who are popping up again in the UK. So
Cornwall, isn't it?
Cornish lithium. You've got lithium down in Cornwall. You've got Alba mining for gold in Wales. There's a gold mine in Scotland as well, and a few over in Ireland. So, and this is partly to do with the fact that governments are waking up to the fact that certain minerals are absolutely critical to economic growth. Particularly lithium. So, British Geological Study put a report together on critical minerals, and this is the European Union has one as well. So does the US, and this is why some mining is sort of popping back to life, springing back to life in the UK.
Yeah, just looking at a chart of the day, pretty much, and this is based off some news from Biotrol, and they are sort of they said that Biotrol, the specialist infection prevention and control company. Essentially, aren't they a cleaning company? I think that's what that's a posh way of saying specialist infection prevention. That's, if you're a cleaner, that's how you should advertise yourself. If you clean houses, a specialist in infection prevention, and I control them as well. And so, you clean, Do you do ironing as well? Yes, I do. So anyway, police report approval of today UK patent following the discovery of unique antiviral properties of certain enhanced extracts of commonly available brown seaweed. I always think there's something magical about seaweed. There's a lot of this going on, actually. Who else is there? Harvest? Is there something? I have to find out this other company. But,
Ocean Harvest. Ocean Harvest.
Yeah,
they're turning seaweed into animal feed.
That's right. Yeah, and there's another company as well. I can't think what they are in that sort of space. But you've seen that this is coming, and you see these magical properties, based in seaweed and stuff. But
it's nature's, nature's remedy, isn't it? And you've seen it in medicine as well. Plant-based medicine. So
another reason why we should protect the environment,
precisely.
If you poison the seas, everything that comes from that will be full of poison. So
so there was a company, nice company I'm having a look at, really interesting, called MGC Pharma. I think you spoke to them recently, Justin. But they produce essentially pharmaceutical variants of sort of cannabinoids, and they're working on psilocybin, magic mushrooms. That's really, there's a growing body of evidence that this stuff is very, very important to mental health, possibly as mental health treatments. It goes back to the Kooth story the other day. I think Australia earlier this week has basically reclassified MDMA and psilocybin as prescribable for certain conditions. And MGC is right in the sweet spot of this, and it's all based on plants.
But in America, there's quite a few listed companies, basically doing out clinical trials on psilocybin and all this stuff. I've been reading about it for a while, very interested in that kind of thing, and how even people with PTSD or ex-forces guys who've got basically come from war torn, and they're helping them get over this thing. But
well, that's what the Australian
that's
what the Australian government move is based on. It's for treating PTSD, and I think
they're called magic mushrooms. They're bound to have magical properties. I mean, it's quite obvious, really, when we look at it. Anyway, so Biotrol, they're going to say CBD extracts are not yet approved for active materials in biocidal products. Biotrol, so that's area of expertise. So now they're actively exploring alternative applications in very sizable markets for over-the-counter stuff like that. So we'll see. So that's very interesting there. But chart-wise, just quickly looking at that, I mean, it's tried a couple of times. You see this. You can see here, there's a 200-day moving average, all right, and it's been coming down, and it's tried a couple of times to break it recently, and it hasn't gone above. But if you see today, that there, if I zoom in, that's the share price. So it's gone above it. But so will it stay above it? Because it hasn't done that, from February 2021. So it'll be interesting to see if we've seen a little bit of because we can see a little line here from obviously higher lows, pretty much going up there, and so. Well, I would say 220, 2.26 would be, a nice level to get above, and that's a new trend maybe that started in the upside there. But
well, they had some results back in April, and they were pretty encouraging, and the business has had a few troubles, but they reckon they'll be back to profitability in the current financial year. So if we start to see some decent numbers coming from them as well, alongside initiatives such as this and product approvals. Then you could see it sort of consolidate a bit higher there.
Yeah. So you can see that line there, basically resistance support. So then and where it got to recently, it was that 2.26. They get above that, and it's been support previously and a bit of resistance. So they can get above that, be good. Yeah, and they are a nano cap pretty much. They are 8 million market cap there. So interesting. Okay, let's look at the top business story, because this is a biggie here. You can read this on the front page. PMI, which is purchasing and managing it, and they said it fell in June at the sharpest pace in more than 14 years. And that's in house building. And in fact, if we go to a chart right now on Taylor Wimpey, which I did punch out on my Twitter today, but they've just broken £1, which is below the previous low. It just hit a few days back in June. And it's almost heading down to these lows of September, October. So it's really bad for sentiment for house building. And the S&P, the PMI came in at sort of 48.9, which is below 50, which is the line of the contraction expansion. And they did predict it'd come in at 51 was the prediction. So it's below that predicted level. So that's not good. So house building is slowing down, surprisingly.
Yeah, well, we spoke about housing yesterday, but we've known that the UK house builders, they put their outlooks out earlier in the year, and their building rates have halved in some cases. They're predicting. So we know this is a sector in contraction. We're seeing it in the results of some material suppliers. I think it was Forterra. It was one of the brick makers, Forterra or Mitchell Marsh. You're seeing a big slowdown in demand there. It's a tough old market. And it's had the rug pulled from under it. It knew it was coming. The removal of Help to Buy, the rising mortgage rates are making, as I said yesterday, it's just very unaffordable. See, they're not going to build houses they can't sell. Absolutely not.
Look at Persimmon. Persimmon's at a low. It's not hit this rate now since March 2013. Persimmon.
Yeah, I mean, it's funny because this sector, I mean, after the financial crisis, 2008, these companies were massively overextended. They're all in serious trouble. What you could say this time around is, we're seeing a massive slowdown in the home construction market, but also these companies are in a much stronger financial position than they were the last time round. They're pretty much debt free. They've spent the last decade returning excess cash to shareholders because they have been raking it in thanks to government support largely. So I mean, there will come a point where this is a sector worth buying. I just don't think we've seen the end of the troubles for this sector yet.
No, I was in Gleeson. They went up and I started making a profit. Oh, there we are. That's the end of the housing slump. And it started rolling over, and I did get out. It broke a certain support level. And I like Taylor Wimpey and Gleeson. I put them through a spreadsheet, and efficiency-wise, they're better than Persimmon. Taylor Wimpey, for example, is better than Persimmon. They got better margins, they got less debt, and so that's probably why Taylor Wimpey hasn't hit a low and Persimmon has. And this is MJ Gleeson, a lot smaller, but I see a lot more capital upside. They do pay good dividends, like I say, no debt pretty much. So if you want to hang on, as long as they're overexposed, but they could go lower. That's the trouble. But like I said, Gleeson not quite, again, same as sort of Taylor Wimpey, is not quite testing that low of October.
Yeah.
But
I mean, they're based. I mean, you value them based on book value anyway, and they're all trading well below book value. That's the value of stock and land basically. So I guess the concern is that actually nobody knows what the price of land is at the moment.
Well, we are going to worry about like I said now, how high can interest rates go? Because I don't think we'll get any relief until a sense of direction is stopped. When will the Bank of England say that's it, or the Fed say that's it? Because as yet, it's the unknown that everyone's worried about, isn't it? How high can interest rates go? Because now I've seen people saying 7%, or that's what mortgages get up to. So you keep getting it, and as long as we keep going that one direction, you keep getting people saying it could be 10%. That worry about how high it'll go until we have some kind of certainty or clarity on that. Then that uncertainty prevails, and and that's not good for sort of house builders and house stocks and all that kind of stuff.
I think this relates to big story of the day number 3, actually.
Let's go to that. Worry, Bank of England. As higher wages become a bigger driver of price rises than energy costs. It was energy costs, of course. They've come down, and say we did look at the oil and gas prices recently, which I mean, are we going into recession? Well, look at the price of. Let me just share this with you. Look at the price of oil and gas. This is oil. 125 has been up there, and now it's down at 77. It's not quite breaking that 73 level. But look at gas, natural gas futures. Wow, it's fallen off a cliff from that. Those this is after Ukraine came in, up at 9, and now down at 2.6. So energy prices have come down, but of course, every other price has gone up, and so to keep up with that, wages have gone up, and so that's what the Bank of England are looking at, and so it could become sort of what do they call it, embedded into inflation.
You've got a couple of problems. It's that workers are demanding a higher settlement, but also there is low unemployment, so it's almost a perfect storm for wages. Companies want to retain staff because obviously it's expensive to hire and train new staff. So to keep their existing staff happy, they are having to put wages up. So it is a tricky one. I don't envy the Bank of England, but they've hardly covered themselves in glory with the way they've handled this over the past year or so, or even longer. And the other thing, there is a general shift, in the power dynamic, in the balance of power between capital and labour. We have gone through many years in which capital has held the upper hand, and you do get the sense, broadly, and I've gone all political again, but there is a swing, and the swing towards Labour, actually, having the bargaining power today.
Yeah, you mean Labour is in the workforce?
Labour is in the workforce, not as in the Labour Party.
Having said that, they've got the string of power as well. But it's almost saying, unless they score some clear own goals, which they've been close to doing, they're a shoo-in to win the next general election, surely. But they've got to make some big mistakes. They've got to make some massive mistakes not to win that, and hopefully they can avoid doing that. Because even though I'm generally a sort of conservative voter, but I haven't bothered. And also, to me, it's not about conservative parties. It's about, and I know it's about helping business. And I say that because if you help business and business, are conducted properly, that'll support the economy and
I agree.
people's lives. So politicians should be there to to help business, not get in the way of it. I think sometimes policies are created, it gets in the way. There are many great businesses in this country run by very clever people, who can. But what they can't do is policies that you set up that's going to stifle them in some way. Talking about the economy, Shell, have you seen that? Shell said cutting oil and gas production would be dangerous and irresponsible.
Yeah, it's interesting. It's really interesting. Funny enough, I watched a short interview with a guy called Alex Epstein the other day, and he wrote a book. Well, it's almost 10 years old, called "The Moral Case for Fossil Fuels," and basically he says much the same thing. That actually fossil fuels have allowed us to enjoy the improvements to lifestyle that we have. That have actually made it possible to survive on what is it doesn't seem like it living in lovely England, but quite an inhospitable planet in many places. And that, if we stymie the use of fossil fuels today, what we're actually doing is making it impossible for countries that are further behind the sort of industrial development curve to develop in the way that we were able to do, during the Industrial Revolution and beyond. So, there is a moral case. He is right to a certain extent. But at the same time, we had the hottest temperature on record, the hottest day globally ever this week.
And also I think it's the hottest decade as well, I think, of all time.
So something is going on, and whether you're a climate change denier or whatever you think, something's going on. Perhaps we don't understand the mechanisms by which it's happening, but you can't imagine that the extent of human activity has not, especially burning hydrocarbons, has not had an impact on the environment. So we are going towards net zero. It's true that we need sort of fossil fuels in the interim, but we certainly, but Shell has pulled back. It's retrenched from a lot of the sort of green promises that it made. The government this week has retrenched from green promises, spending promises that it made. So we have to do this. We have to invest in renewables. We have to invest in nuclear. As I think I said the other day. But we do have to support the transition with transition fuels. I think gas is the obvious example. But
it's amazing. It's almost like in this day and age, especially social media, it probably exacerbates it. But it's everything that is of the extreme sort of wins. Like yesterday, I was watching Wimbledon. You get the stop all protesters on the pitch. I think, well, hang on, guys. You may get attention, and that may drive things forward for you. But we can't just stop oil. Everyone, it doesn't matter. I'm for renewables, but you can't just stop oil. Like you said, it's not practical.
No,
you can't. And everything, all the plastics you see made from it, or industrial production, it's all done with oil. There's loads of oil, paints, everything. It's everywhere.
It's not
you
called.
Can't stop it.
Exactly. Well, it's not called the energy transition for nothing.
Yeah, exactly.
It's because it is a transition. I mean, speaking of plastics, you're right. A lot of human activity sort of stems from the hydrocarbon industry. We've actually written a piece, which I'm going to publish this afternoon, on biomaterials. So, there are a lot of companies out there who are developing, innovative solutions, whether it's around, bioplastics or new types of synthetic fiber that are much less harmful to the environment. So there are ways to wean ourselves off of oil-based products, but it will just take time. It will take time. And what I would say, coming back at Shell is, well, I think they should be really going for it on the green front, but it's not what their shareholders want. They just want, exactly. It goes back to what we're talking about the water industry. They just want the dividends, they just want the returns, and they don't care where they come from. And
even that, on the other hand, is like you got one extreme of stop all, and the other extreme of investors just want the dividend. You think, well, if the stop all guys are right, and we won't have any planet in 20, 30 years time, does it matter about your dividends now? Because you won't have any grandchildren, essentially. Well, they won't be around, So stop and think a bit. Why don't Shell become a pioneer in renewable energy and really go for the planet's good? And then if they capture that, become the biggest player in that area, there'll be plenty of dividends for your grandkids and your grandkids and your grandkids, and they're doing the good thing, the right thing, but sustainable energy creation.
I agree.
So it's just everything's on extreme. You think there is a middle path sometimes, guys. Shell, you can put half your profits into renewables, and it doesn't have to go to shareholders.
I 100% agree. 100% agree with that. Incidentally, the guy that was protesting on at Wimbledon yesterday, I think he was a retired civil engineer. So this is not a crackpot. This is someone that understands how the world works. And he was concerned about his grandchildren's future. I mean,
I know, but you can become a crackpot if you get obsessed. It doesn't matter how intelligent you are. I mean, if you become obsessed with something and brainwash it, I've done it. When for a year or two, I went from eating meat, and literally, the only thing left of that, my wife refused to cook meat for the kids and then something for me, and so in the end, I relented. But I still don't drink milk, and I think I still in my head, I think I didn't even know about the milk industry. Now calves are basically separated from their parents. That's their milk. It's not our milk. and yet we say a right to their milk. I mean, it's really odd. We find it really odd about drinking human milk, having human milk on the shelves of the supermarket because it's like someone else's. Yeah, but you're drinking cow's milk, but that's an accepted norm. That's talking about brainwashing. We're accepted that's a norm, but drinking the human milk isn't. So yeah, you can get brainwashed no matter how intelligent you are. But
this is not an avenue I expected to go down.
No. Anyway, last quick story. It's story 4, which we could drop off. But have you joined Thread yet, John? I mean, Twitter's there. I've just joined Thread. It's Mark Zuckerberg's answer, and I don't know what the stats were. Something like even if 10% of people, because basically you have to download the app, but then it says you want to use your Instagram handle for this Threads thing, and they say if 5-10% of people do that, pretty much, it'll beat Twitter. So, and that's what it is. It's called a friendly Twitter, Mark Zuckerberg and Elon Musk. And that's how the fight came about, because they have a cage fight, which in fact, Elon Musk is a ridiculous idiot to try to accept that, because Mark Zuckerberg is a jiu-jitsu sort of champion and fit. And Zuckerberg is a chunky man who said, the only exercise I've done
Musk is it?
Kids.
Yeah. It will sit on him.
Yeah, exactly.
No, I haven't joined it. I'm not on Facebook. I don't use WhatsApp. I have an Instagram account for which the password I can't remember. I use Twitter to get news, and otherwise, I really don't think the world needs another social media platform. No, haven't we had enough of them?
Yeah, we have. Let's don't forget all those stories there. Anything is on the Vox Markets on the homepage there, plus rises and falls, all information. Just a quick look at the indices again. It hasn't changed. In fact, it's getting worse. I think 1.4% for the FTSE down. In fact, AIM now is down just over 1%. So there we are. But okay, John, until tomorrow. Speak then. See ya.
Speak tomorrow. See you later, Justin.